What is up, DCS family? Good afternoon. And do we have an absolute doozy of an update for you guys today? So, without any delay, let's get started. And as usual, so just to tell you, we're going to take a look at the technicals today of Bitcoin, Ethereum, some really exciting news in the altcoin market, and then some really concerning news regarding the real economy. But depending on which side of the fence you sit on, it could be good news for crypto. It's undoubtedly going to be bad news for the global economy, but you're going to understand why that matters to us. So, before we get started on the doom and gloom, let's take a look at the price scenarios first. So, the first thing we're going to do is take a look at the total crypto market cap on the weekly. And we can see in macro terms, we're above this really key level of about 242. And as long as we stay above that level, we're still within this range here between 242 and about 300. And we're in the middle, pretty much exactly in the middle of that range at the moment. Still seeing the bottom of this ascending triangle as an area of resistance, but structurally, everything seems to be sound here. So, what about Bitcoin? So you guys will know, here's our macro symmetrical triangle we've been in since 2017. This is the parallel channel that we've been in since June of 2019. So let's take a look at how price has been holding up. So last week, you guys will know we saw that unprecedented event, and that was two consecutive weekly closes outside of this macro symmetrical triangle structure. So there's one and there's two. So this third week, it looks almost inevitable that for the third week, we are going to close above the structure, as well as above the top of this parallel channel and above this symmetrical triangle, which you guys will see a bit more clearly in the daily. So even with this massive sell-off that we'll explain shortly, Bitcoin is still holding above all of its key macro levels. So you guys will know, as we said, we do not expect Bitcoin 10,000 is both a big technical level as well as a big psychological level. So it's not just going to break out of that level without some sort of significant resistance, which we've been seeing has been happening consistently here, right? So if this is the 10,000 level, we can see one, two, three, almost four retests of that level so far without a successful breakout. But as we eat into that resistance level, those sell orders are going to get exhausted. And I really do feel now that we're above these macro structures and we've gotten some confirmation above those structures that it's almost inevitable that we do break out from that level. So this is further bullish confirmation, even though it's a pullback, gives the bulls a bit of time to rest, and we don't really see any confirmation or bias from the RSI. So in terms of Bitcoin, as long as we stay above this 9.3 level, which is the top of the parallel channel, we're all good for the weekly close. And worst case scenario, if we stay above about 9.1, we're still bullish in macro terms. So that's the outlook for Bitcoin, and we're still going to get to, in fact, right now, let's get to why we saw that massive pullback that actually stopped out all of our trades. So it was completely a non-technical driven event. It was a fundamental event. And what it was, you guys will know, we updated you in the group, it was the worries in traditional markets that with all of the opening up of markets, just like how we have in South Africa here with the easing of lockdown restrictions, that we're now going to see a second wave of coronavirus that results in everything basically being shut down again. And obviously that bodes well, very, very badly, for the real economy. And that means it should bode very badly for the stock market. Apologies. So we can see that actually playing out in real time over here. So this is a comparison of the S&P 500, which we use as a proxy for the stock market. It's the top 500 biggest companies in the US. And the orange line here is the price of Bitcoin. And we broke it down on the 5 minute. We're taking a look at the 5 minutes, so we can show you some very interesting things. So to recap, this blue line is the stock market, this orange line is Bitcoin, and this purple circled adventure is when the Federal Reserve or the United States Central Bank basically made the announcement about this entire second wave and what their expectations were. And first thing that we have to note here is that you can see that Bitcoin and the stock market both reacted, one, very negatively, and two, almost in step. So in the short term, we can see these markets are still very highly correlated, right? So that is in fact what caused or this risk-off sentiment, which I explained in the previous video, is what caused the sell-off in Bitcoin and by extension the entire market. So it had nothing to do with the technical levels or anything like that. And although this may seem like a net negative, it really does give us some positive outlook on Bitcoin. And the reason being is that we can see, or obviously, or you guys will know, the stock market is quite a mature market. So everything is priced in precisely. If there's an announcement made, the market reacts immediately, right? And we can see that Bitcoin did the same thing. And what that tells us is that there's either a much higher concentration of institutional investors in the Bitcoin market for them to be reacting to external events like announcements from the Federal Reserve so quickly and so aggressively, or the retail investors like us that are involved in the market are becoming a lot more sophisticated in our investment decisions. And either outcome is a complete net positive for Bitcoin because it shows us that the market is maturing. Okay, so for a second now that we understand where the crash came from, let's jump back to some exciting news. So you guys will know that we've been tracking altcoin season or potential upcoming altcoin season quite closely. And a few of the proxies that we use for an altcoin season are Ethereum, Bitcoin, because Ethereum is the same way Bitcoin acts as a leading indicator for the entire market. Ethereum acts as a leading indicator for the altcoin market. It's just a great proxy. And we can see here the Ethereum Bitcoin pair has been facing resistance at this downtrending line. Sorry about that. Has been facing resistance from this downtrending line since April 2017. So it's a very, very significant level of resistance. But we can see in recent weeks, we've been actually retesting this line. And in fact, it looks now like we may have potentially broken out of this downtrending line. And what that means is as soon as we get a confirmation of this breakout, which we're closely watching, we could see Ethereum against Bitcoin make an immediate move of about 26% unleveraged, which is about 260% at 10x leverage. So it's something we're closely watching. And the exciting thing is that this would just be the start or the spark of that altcoin market. So this move would just be the initial and probably the smallest, one of the smaller moves we'd see in the market. So we could be on the precipice of that move, or we could see another rejection and then we'd have to wait for another retest, but we're closely watching that. And the reason we feel like a breakout is much more likely is because a few other indicators are showing us some really positive sentiment in the altcoin market as well. So we're now taking a look at the total market cap of crypto excluding Bitcoin. So basically just all of the altcoins in the market. So we can see that's currently sitting just under $90 billion, which is still ridiculously low in terms of the relative valuations of some of the companies in the equity space. And this is the entire altcoin market, from Ethereum down to coin market caps, those unknowable coins. So we can see that the altcoin market cap has been trading in this parallel channel since May of 2019. And currently we're testing the top of that channel, but we're also holding up really well against this support, right? We can see prices never closed below the support line, even though it's really steep and aggressively upwardly sloped. And that's really positive because it shows that the altcoin market really is experiencing some really good forward momentum. Even in terms of that pullback, we saw some of the altcoins actually pull back less than Bitcoin, which is extremely surprising. So this gives us or adds to the confirmation of the positive outlook for this Ethereum Bitcoin pair breaking out, because we could potentially see in the very near future, such as the coming week or 2 weeks, a breakout of the altcoin market from this parallel channel. And that would potentially take us, straight up to a market cap of about $122 billion. So there is some significant upside there. Some of the altcoins that we're particularly watching are Tezos, Ethereum. We are looking at Chainlink because a few of our viewers have requested that. We're looking at Chainlink, Litecoin, BNB, and basically your entire sort of top 10 space generally. So things are looking really good for crypto, provided Bitcoin closes above that key 9.3 level that we spoke about at the beginning of the video. Worst case scenario, closing above 9.1 would still be okay. But anything below that, and we invalidate this entire sort of bullish market structure that we've been in over the past few weeks. So now that we've taken a look at the technical view of price and what's driven the sell-off in the market, let's take a look at what we're expecting and what could potentially happen in the future, right? So right now we're going to take a look at gold. And the reason we're looking at gold, you might be quite confused, is because we spoke about in our previous video how unfortunately Bitcoin is still viewed by investors as a risky asset. So Bitcoin goes up when we see risk on sentiment, when the stock market is really pumping. Because that's generally when we see risk on sentiment. Equities are also viewed, so stocks are also viewed as a risky asset or a risk on asset. And gold is your ultimate risk off asset, right? It's your safe haven. When people are scared, they flood into gold. And why we're looking at gold is because we can see, even though we had that significant pullback in equities, which spilled over into crypto, and you guys saw in the group, it's quite global. It's not just in the US equities market. It's spilled over into Asian markets, etc. Gold has been relatively stable. So for the week, it's up about 2.8%. And if we look at the daily, it becomes a bit more clear. We saw that sell-off occurred around, I think, the 9th of June. So we can see from the 9th of June close to where we are right now, gold has been pretty stable. So what that means is that even though investors have been sort of exhibiting a risk-off sentiment, they haven't flooded into risk-off assets yet. And that means that there's still a lot of uncertainty. And why this is important for Bitcoin is because, as you've seen, if we see a very negative reaction from stocks, it's very likely it could spill over into Bitcoin and invalidate all of those key levels that we're looking for. But in the short term, no matter what has happened, Bitcoin still managed to keep those key levels, and that's very, very bullish for us. So why are we still a little bit uncertain? The reason we're still a bit uncertain is because the market as a whole is still really uncertain. And not the crypto market, the entire global market. And I don't think people really grasp the magnitude of what we're seeing happen around us. So the UK economy in April shrunk by 20.4%. And I know for a lot of guys in economics, it's like, okay, that sounds like a lot, but it doesn't really mean anything just as a pure figure. So if we take a look at this graph, this shows the monthly drawdowns. You can see these these few little red lines here. This is the monthly drawdown during the Great Recession, right? Look at this. We've seen successive further massive market crashes, and these are the monthly drawdowns in the UK's GDP figures, right? This is April. This is unprecedented in terms of gross domestic product. And what that means is how much products and productivity the UK economy is producing. And if there's no productivity, there's nobody being paid salaries. If there's nobody being paid salaries, there's nobody with money to spend in the economy. If there's nobody to buy the chips and sodas in the shop, to buy the TVs in the electronic shops, there's no money to pay the salaries for those people who work there, and they get fired. And there's less money in the economy. So there really is, and rightly so, some very, very big concerns in the economy at the moment. And that really shows in the way that equities are really swinging in either direction. We don't see these sort of big moves in equities generally. And it is an unprecedented time for the global economy. So this is the reason we're slightly cautious. Everything in terms of crypto looks great, but as you've seen, external factors do have an effect, quite a significant effect in this market. So we do need to keep this in mind. And I mean, just on a side note, to think about it from a sort of on the ground perspective, I mean, even here in South Africa, some of our top economists, like the likes of Mike Schuessler, etc., they're all predicting our unemployment rate could hit 50%. And if you guys know how that unemployment rate is constructed, that means the real unemployment is probably going to be closer to 60 or 70%. And just like I explained in this UK example, when that many people are not making money in your economy, who's spending the money in your economy? And if no one's spending money in your economy, how does your economy grow? How do you get those jobs back? How do you get that output back? And these are real massive concerns we're seeing, not just in the UK, like I said, here in South Africa as well. In fact, I've been speaking to a few guys in the market, and the likelihood of a massive amount of retrenchments and repossessions of properties, both commercial and residential, in South Africa right here, is massive. In fact, Cape Town is looking terrible in terms of that. So once these payment breaks and these payment holidays and these stimulus packages from the governments wear off, because they can only last so long. I mean, the payment breaks from your commercial banks here in South Africa about 3 months, I think. So when on the fourth month you have to pay your rent, but you've also got to pay the rent for those 3 months that you missed. It's a payment break, not a sort of write-off. So there is still a lot of potential, and when I say a lot, I mean a lot of potential pain to come in the real economy. And then if you guys know about the whole goal of crypto and how it's structured, that is a net positive in the long term for crypto. But it's very concerning to think about how the real economy is going to look going forward. But just so we do not end on a grim note, the altcoin season that we have been seeing potentially, or on the cusp of, so waiting for this breakout here, is being confirmed by the fundamentals of the crypto market, which is on-chain metrics. So we can see that over this past weekend, the amount of money spent on Ethereum fees on the network actually topped those of the Bitcoin network. And it was not an isolated event in that it happened consistently over a week, and that gap actually increased successively. So we can see, for example, here's one example on June 6th, the total amount of fees spent on the Bitcoin network was, on the Ethereum network, was about $500,000, whereas the total amount of fees spent on the Bitcoin network was $300,000. And we can see that that is quite a significant difference. A lot of it is due to a lot of the stablecoin markets, etc. But when you couple these things, together with the technical aspect that we're seeing from Ethereum, and the fact that they have the ETH 2.0 upgrade coming, hopefully at the end of the year, where they transition to proof of stake, we see an extremely bullish outlook on Ethereum. In fact, we're building a macro position, and that we expect to hold for a few months. So that is your wrap up for the weekend. In summary, we need Bitcoin to close above 9.3. Our Ethereum trade is looking good. We're bouncing off the bottom of that channel. We didn't cover it, but it still looks good. We're still waiting for a little bit of confirmation from the real economy to see how they react, because it's obviously going to affect our trading decisions in the short term. But in the long term, things are looking great for cryptocurrency. So that is our weekend wrap. I hope you guys have a brilliant weekend and keep your eyes on the group.